Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Welcome into the Wednesday, November 17th edition of Market Talk. I'm your host, Jesse Allen. Thank you so much for joining us as we are broadcasting live here the rest of this week from the National Association of Farm Broadcasting Convention in Kansas City, Missouri. We can find us online, markettalkag.com. That's our home on the web. Find all of our streaming sources there. You can download on Spotify, Apple Podcasts, iHeartRadio, and so many more locations. You can find us there and find the latest news of agriculture, market information, and more. It's all online, markettalkag.com. Coming up, we sit down with Arlan Suderman of StoneX in person here in Kansas City to take a look at this marketplace, the trade today, see the action, a lot of action, especially in the soybean side of the equation. We're going to talk to Arlan about all of that coming up, as well as the fertilizer situation, which is a continued, it seems like it's always changing. Prices keep going higher. There's a lot of worry about fertilizer prices, availability, etc., heading into next year and heading into this winter. We talk with Josh Linville from StoneX coming up as well here on today's episode of Market Talk. I'm going to recap our numbers here real quick before we bring in Arlan Suderman on the show today. As we take a look at the market trade, again, soybeans were the leader, followed by wheat today. Bean meal and corn were also higher. There wasn't a whole lot of news to really explain the strength today in light of the U.S. dollar reaching new highs and crude oil under serious pressure. We did see some soybean and bean oil sales announced this morning. We got a sale to China of soybeans, 4.85 million bushels to be exact, and a sale of 30,000 metric tons of soybean oil was announced sold to India as well. Now, we also, we got that. We got ethanol production. That was recorded at an increased level equating to 16 million bushels of corn usage, above the weekly average needed to reach 5.250 billion bushels, as production for the week ended November 12th rose by 2% today to 1.060 million barrels per day. Ethanol stocks rose modestly by 1% to 20.1 million barrels. But again, outside of all this, not a whole lot of news. This could be more due to money flow as funds move into longer ag commodity positions as a hedge against rising inflation. Funds were active buyers, big buyers, in fact, on the day Wednesday, buying an estimated 13,000 corn contracts, 17,000 bean, and 7,000 wheat contracts as of noon on Wednesday. Crude oil prices saw a brief bump following the release of the weekly DOE inventories as well, which showed a 2.1 million barrel draw in stocks on the week ending last Friday compared to expectations for a million barrel build. However, crude back down to trading safely over $1 per barrel lower as we see that it's below $80 a barrel here as we are talking right now, down to about $78 a barrel actually in that crude oil market. So not something that's going to support grains, you would think, but still an interesting set of dynamics here today. The wheat market, major global wheat importers have been extremely active in the past week with much more fear over global supply than in corn and soybeans at this point, given various wheat types, protein levels, and trade flows. That's going to continue to support this wheat market overall. And again, we're going to be talking about all of this coming up with Arlan Suderman of StoneX in just a moment. Let's take a look at the final numbers today in grains. December quart up 4 1/4, 5.75 1/4. March quart up 4, 5.81 1/2. January beans 25 3/4 higher, 12.77. March up 25, 12.88 1/4. December bean meal up 7.20 a ton, 374.70. December bean oil 6 points higher to close 59.23. Chicago wheat December 12 higher, 8.22 1/4. December Kansas City wheat 13 1/4 higher at 8.34. Minneapolis spring wheat December 12 higher, 10.27, and December oats 9 higher, 7.39 1/2. Over in livestock trade today, hogs gave up most of the gains that we saw yesterday, as we saw that hogs were down, mixed to lower, especially front month December. That was down today, 155 lower, 76.17. February hogs down 22, 83.15. April hogs 15 higher, 87.52. Hog prices and trends steady in Dorchester, Wisconsin, and Garnerville, Iowa, with barrels and gilts at 59. Red Oak, Iowa, $3 higher the trend, with barrels and gilts at 48 in that location. Meantime, cash cattle market saw a little interest develop on the trading day as we saw some bids in Nebraska and Iowa, both live and dressed, but we are going to be waiting for more activity there as feedlots have yet to jump on the offers as they're hoping to move this week's market higher once again. We'll see if more interest develops here before the end of the day. More of it's probably going to develop as we get into Thursday and on into Friday. Final numbers in livestock for cattle. December live cattle up 50, 132.22. February up 30, 136.40. April live cattle up 47, 140.27. November feeder cattle 42 higher at 156.07, and January down 35 at 158.92 on Wednesday. Again, we are in Kansas City at the NAFB convention here, the National Association of Farm Broadcasters. And coming up, we're going to talk fertilizer with Josh Linville from StoneX. Right now, though, we're going to bring in Arlan Suderman. He is the Chief Commodities Economist with StoneX. And Arlan, it's great to have you on the show today. See you here in person in Kansas City. Thank you for joining us. How are you?
It's real good, Jesse. I look forward to these opportunities, and it's good to see you in Kansas City.
Well, Arlan, let's talk about the market trade here today, and just kind of in general. You know, we came in here on Wednesday with a soybean sale announcement to China. Bean oil to India was on that morning wire, and it really seemed to kind of pop this soy market here on the early trade Wednesday. Bean meal, bean oil, soybeans all up nicely here. Talk about what you're seeing in this soy complex today.
Yeah, really a culmination of factors. We've seen some feeding margins improve in China as demand has picked up there for soybeans, and they've been making some purchases. Probably one of the things that's received very little attention overall has been the demand for soy meals picked up. We've got a shortage of lysine in North America, in the U.S., and in Canada. Lysine is an amino acid that's necessary to supplement rations where they're feeding distillers' grains. And so with that shortage of lysine, that's forcing people who've been feeding distillers' grains to shift more toward soy meal again. So we've seen this big increase in soy meal demand. That has been the most recent kind of energy behind lifting soybean prices. That then in turn lifted prices up to test the top of the downtrending channel in the charts, as we've been kind of in a bear channel now for a number of months in soybeans, the last 5 months or so. And when it broke above it this morning, we hit buy stops that were pre-placed in there, and that started the momentum upward, and the computers that trade momentum just added a lot more buy orders, and we were off to the races. Well, if you're going to take soybeans up, all of a sudden that becomes a threat to corn acres for next year. That's really the story right now, is the markets are focused on 2022 fundamentals. Corn has to protect its acres, and it was doing so pretty well until soybean prices took off. And now that soybean prices are taking off, we're starting to grow that soybean corn price ratio for the new crop contracts once again. So corn has to respond to that to make sure to protect its acreage. And so that's why we're seeing this strength in both the corn and soybean markets this morning.
I wonder as well, you mentioned that relationship between soybean and corn, Arlan, and I know corn the last few sessions, we came out of the report, it just feels like corn's been kind of banging its head on the ceiling a little bit. Do you think this move in soybeans, if it continues and we break through some of that downtrending channel, do you think would be a way to pull corn through that kind of glass ceiling it's been hitting lately?
Yeah, I mentioned that soybeans had been bumping against the top of the downtrending channel on the charts. Corn was bumping up against the top of a sideways trading range that it's been in for the last 4 months or so. And so this rally in soybeans, it's yet to be determined whether soybeans are going to go sideways or start an uptrend longer term. But these higher prices of soybeans now increase the risk that corn prices may establish an uptrending channel. So that's the thing that we're going to be watching in the days ahead, is how is this momentum sustained. And it's all about next year's acreage mix. And it's kind of like fertilizer or even toilet paper in the retail stores. When there's a talk about a shortage, people who need it start buying and hoarding supplies. We've seen that in fertilizer, we've seen that in toilet paper over the last 2 years, and a whole host of other products, and now it comes down in acreage in the crop mix as well. So there's a lot of money playing this inflation story, looking at these ag commodities as a factor to play into that, and this story of fighting for acreage feeds the mantra they need for the fund money to come in and have the ag commodities in their portfolio as a hedge against inflation as well.
Arlan, let's talk the wheat markets. Back higher on Wednesday. We had that sell-off on Tuesday with a sharply higher U.S. dollar. When we think about just the fundamental situation in wheat, the lack of global quality milling wheat out there, and some concerns about supply shortages on the wheat side globally as we go through the next couple of months into 22. Talk about just the fundamentals of this wheat market, what you're seeing here post-report last week. Has anything really changed in the wheat markets?
Yeah, you laid out a lot of it really well, and we still do have tight supplies of quality milling wheat in the world, and a lot of that was amplified by the short spring wheat crop here in the United States and in Canada. And so whenever we get a price break, we'd see demand come in, millers come in, etc., but the prices would continue to trend higher. And spring wheat market, which has been the leader, pushing well above $10, got to a level where it started to kill demand as it kind of switched and found other hard red wheats, etc., to be able to displace the hard red spring, and we kind of killed demand. And so we saw a sharp downward correction in the Minneapolis market in recent days. That yesterday found a level where the buying started coming back in. So what the market was doing, saying, okay, we know what levels killed demand, what level can now we rebuild that demand base once again? And it started to do it yesterday. The buying started coming back. That strong dollar, which we hit new 16-month highs again early this morning, that does create headwinds, makes it tough for us to compete on the world market. But there's enough buying come in right now that it is helping to support the market coming back. Question is now, are we going to establish a broad sideways trading range? Well, again, corn and soybeans, cotton, all of these crops are fighting for acreage for this next year. All of it's going to go into play. Do they race for those acres, trying to hoard those acres, or do they find an area of balance over the next few months till we get closer to spring? That's what the market's in the process of deciding now.
Talking about crude oil as well, Arlan, I know a lot of folks watch the crude oil market and how that relays into commodities. In this market, we've been above $80 a barrel, West Texas crude. We're kind of going back below that, kind of just seesaw, ping-ponging back and forth around that $80 level. What are your thoughts with the crude oil market and how that's factoring into the ag commodities?
For much of this year, crude oil has been the leader on the inflation trade by the speculative community, helping take us higher and providing leadership for the grain and oilseeds, and certainly for the edible oils and those in corn as well that are made into biofuels. But crude oil has really struggled here of late, and part of it's been because of the strength of the dollar. Crude oil is going to face more obstacles when the dollar is strong. Part of it is because of COVID restrictions in China that are really slowing down its economy dramatically. China has far fewer numbers than us. I think the latest count is there was 8 positive cases yesterday reported. Well, that's just a tiny fraction of what we have every day in the United States, maybe almost 1,000th of it. But they have a zero tolerance policy, so they'll shut down one of the world's busiest ports just because of one case. They shut down Disney with 33,000 guests in at Disney Shanghai because of one positive case. So that's what they'll do, and that is killing the tourism industry, that's killing the restaurant industry. It's really hurting their economy, and that means lower energy consumption. So that's another one of the problems facing crude oil right now at current price levels.
We're talking with Arlan Suderman of StoneX. Arlan, we should touch on the livestock markets as well here today. Feels like we came up against a little bit of resistance here in both cattle and hogs, and no doubt, I'm sure, on the cattle side, higher corn prices probably factoring into that a little bit on Wednesday. But hogs had a really impressive day Tuesday, and then kind of turned it back around to more mixed trade here today. Any general thoughts you have on cattle or hogs today?
Well, as we look at the hog market, it had quite a rally there. A lot of it's chart related. We rallied up against some resistance, had a pretty good finish into the market on Tuesday, but sustaining that above that resistance level in the charts for the December contract has been a problem. We still have soft cash prices. We still have seasonally weak demand. We still have packer limitation concerns here over the next 30 days. So sustaining the rally is more difficult in the hog market. Cattle market, we have much stronger fundamentals, with the exception of packers are buying this week for a holiday shortened slaughter week next week. And so while the fundamentals have been good overall, we're kind of taking a pause in them this week. So this week's cash may struggle a little bit more to sustain that up rally, being 2 to 4 higher last week on a live basis. This next week's slaughter total will probably be down. We've had 3 or 4 weeks now of good, strong slaughter totals. That's probably going to back off with the holiday. So taking a little bit of the steam out of those livestock markets.
Well, I know Fed Cattle Exchange auction today, 1,973 head, 308 actually sold, and it's looking like prices are maybe $1 or $2 lower than last week, some of the early bids coming in. So it'll be interesting to see how cash country on the cattle side reacts this week. I know looking to get some of those higher prices, as you mentioned, but it's going to be interesting to see if that actually comes to fruition by the end of this week, Arlan.
Yeah, and after we get past Thanksgiving, well, then we start getting in some of the formula cattle are going to be available. So we got to get through that and then reassess demand and where we're at, see if we can sustain additional gains in this market.
Arlan, any final thoughts, anything you want to reiterate to our listeners here today, just things they need to maybe keep in mind going through these markets and heading into the holiday season?
Yeah, we're still in an inflation mode, and we saw a strong retail sales report this week. We saw strong inflation numbers last week. That has the attention of the speculative community watching the ags. That's very real in agriculture as we look at input costs for next year's crops. And so it's a matter of looking at both the input side as well as what we produce and what we market, and focus on the margins, treat the farm like a business, and try to lock in margins where opportunities present.
Arlan, appreciate the time. Thanks for joining me here at NAFB in Kansas City, and I know we'll talk again tomorrow. Thank you.
Thank you, Jesse.
Well, again, that's Arlan Suderman, Chief Commodities Economist with StoneX. Coming up next, we're going to talk about the fertilizer situation, price, availability, how it's going to affect our markets, our bottom line, and more. We're going to talk with Josh Linville from StoneX. That's coming up next here as we continue with Market Talk right after this. This episode of Market Talk is brought to you by MyYield. MyYield is a family-owned company that empowers farmers across the country to treat their own seed on their own farms. MyYield growers are cutting input costs, improving yields, and taking control of their operations. If you want to learn more about on-farm seed treatment and the latest technologies, go to empoweringfarmers.com. That's empoweringfarmers.com. And also brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And we're back here on Market Talk live from Kansas City, the National Association of Farm Broadcasting Convention going on this week here at the Weston Crown Center, and talking with a lot of folks throughout the ag industry, not just talking markets, but talking policy and trade and new products and much, much more. And also talking about hot topics like fertilizer, prices, availability, you name it, a lot of questions surrounding that, and that definitely plays into our market trade as well. And here to discuss it with us, we bring in Josh Linville with StoneX to talk about it with us. And Josh, it's great to see you in person. Thanks for joining us. How are you?
I'm doing great. Yeah, good to see you in person. It's a little better than doing the virtual thing.
I know. The virtual thing works. It gets the job done, but it's always nice to connect with people in person and talk about things. And I know you have no shortage of things that you've been talking about with folks here the last few weeks. Just this fertilizer situation, prices, and everything going on surrounding that. Catch us up on just the latest. What are you hearing when it comes to fertilizer prices? and availability and everything else. Just catch us up on the latest.
Yeah, I'll tell you what, looking at the nitrogen side first, that's really been the hot topic here recently. We're in the middle of anhydrous application here in the fall across North America, and there's been some things that have continued to pop up overseas. So starting overseas, because it's an international market, that's where we need to start our focus. India just wrapped up a big purchase tender. They locked up 1.6 million ton for shipment through the rest of the year. Now, this was a few more tons than people thought was available through the remainder of the world, but it was very successful in dropping inventory levels that we shouldn't go into January 1st, into 2022, with very, very few tons available to the rest of the world. And the reason this is important is Q1 is a very high world demand period. You've got the U.S. buying, you've got Canada buying, Brazil, India, Europe, Asia. All of these countries all come together at the same time to purchase. So we are going to start the new year low on inventories, high on demand. That's a very, very supportive situation. Europe, I think we talked about that last time we chatted.
Yeah.
Natural gas prices were high. Luckily, they were starting to come off. That's gotten worse. We've seen more head banging going on between Russia and the European countries. Prices have gone higher. It looks like there's less and less hope of that coming to a short conclusion. Not to mention the winter months are already getting cold. People are using it to heat their homes. And then here at home, luckily, anhydrous run is really, really good. Mother Nature's playing very nice this year. This is exactly what we needed. But the prices are starting to reflect it. We're hearing numbers, $12, $13, $14, $1,500 a ton, depending on where you are and who you're talking to. But it does look like, barring some unforeseen circumstance, it looks like anhydrous is going to have a great run. That's going to reduce inventories to very, very low levels going into the wintertime. Again, low supplies, high demand going into next spring. That puts the negotiation power in the hands of the producer. And producers like high prices because higher prices mean more money in their pocket.
And I think as well, I've heard some folks say that, South America, watching what their crop does, this is going to be an indicator of what things could look like for us in the spring when it comes to availability, maybe not so much prices, but just availability. What would you say to that? Is watching South America right now, is that going to be a good indicator for spring?
It could be. We hopefully are on the front edge of this thing. We've been talking about it. We're trying to stay ahead of it. I never want to sit there and say we're not going to have supply. We are generally really, really good about making sure we've got what we need where we need it. Where I start to get nervous is, honestly, it's like third world countries in Africa and places like that. If you're a world producer and you've got options and you're low on supply, you can be choosy on where to send stuff. And so are you going to send it to a place like in Africa that may struggle to pay its bills, or the U.S.? Well, you're going to take the U.S. every single time. So I'm not worried about us. I think we'll be okay. We always find a way. But I am worried. I'm a kid of the 80s, right? I grew up, watching these commercials of kids starving in Africa. I never want to see that again. That is the nightmare scenario that's kind of keeping me up at night right now.
Now, as a producer, I've heard varying stories. I've heard some guys who finally just said, all right, I'm going to lock in this price to make sure I have it, et cetera, in case it keeps going up. What are your thoughts for guys who maybe haven't locked in those prices yet on certain products? I mean, is it something where they should really think about finally biting the bullet and doing it, or do we have some light at the end of the tunnel here?
So this is today. Today is a snapshot, and everything can change in a moment. And there are definitely paths to lower prices by the time we get to spring, but there are far and few between. The thing I've been telling guys is I'm never going to sit there and say you need to buy or you don't need to buy, because I'm not the one answering to the banker. I'm not the one that's in charge of my operation. What I'm telling guys is, and gals, farmers, you need to look at it from your own perspective. Number one, try to pull emotion out of that decision making. It's so easy right now with where everything is, and it's not just fertilizer. It's chemicals, it's seed, it's land prices. You can't get your hand on a new tractor. It's everything. It's a very stressful situation, so it's very easy to get angry and upset and make it an irrational decision. Try to pull emotion out if you can. It's very easy for me to say it. They're in the hot seat. But then once you do that, look at your operation and look at the input costs and look at where the grain price is and look at what you can produce at each field. You are the CEO of your organization. You need to make the best decision for your organization, not for your neighbor, not for the next county over, not for the next state over. What is the best option for you? And if that means locking it in today because you can lock in a profit, there's your answer. And if it doesn't make sense, you need to look at switching, there's your answer.
You mentioned a couple things related to supply chains as well, and I think one other thing I ask you, what are your thoughts on supply chain and how that's going to affect fertilizer and things moving forward? I mean, we're hearing about all the issues at the ports. I know, rail, trucking, you name it. There's a lot of things that a lot of people are saying the supply chain's kind of broken or at least fractured. What are your thoughts on how that's going to relate into everything?
Well, so we watch a lot of the bulk vessel freight rates around the world. The most important one for me is the Arab Gulf to NOLA, New Orleans, Louisiana, down the Gulf of Mexico. And we've actually seen the prices come off their highs. We got to a high of $80 a metric ton, and that's since dropped back to $55, and hopefully we'll see that continue to go down. So things are starting to normalize a little bit on that perspective. But the problem is we're still at the risk of river systems in the U.S. flooding or having not enough water. Truckers are very, very hard to find. Nobody is wanting to work or truck. And then you start looking at it from the perspective, as much as the farmer doesn't like these high prices, well, neither does the supplier, the co-op, the retailer. They don't want to put a massive amount of product in their warehouse and then just hope that the farmer shows up to purchase it. That's a ton of risk. So we are still going to be dealing with supply chain issues, and that's where we continue to sit there and tell people, please have conversations. You don't even have to buy it, but at least tell them this is what my plans are. Here is what I'm going to plant. Here's what my fertilizer demand needs are going to be. Give them a fighting chance so they can try and stay ahead of it.
Well, no doubt it's going to be a conversation we're going to continue to have for the weeks and months ahead. Josh, appreciate the time. Thanks for joining me here at NAFB, and we will, I'm sure, talk again real soon.
Absolutely. Looking forward to it.
And again, that's Josh Linville with StoneX joining us here today on Market Talk. Earlier, we had Arlan Suderman from StoneX as well joining us for the full show today. That's going to do it for our Wednesday, November 17th edition of Market Talk. Thank you so much for joining us once again. Find out more, markettalkag.com, our home on the web, markettalkag.com. Coming up tomorrow, we'll talk with Brian Doherty from Total Farm Marketing. He will be here with us in Kansas City. We'll have plenty of other updates as well coming from the NAFB convention over the next couple of days here, a couple of shows here on Market Talk. So be looking forward to all of that. Again, find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.